Hi, everyone. My name is Dustin Miles with Momentum Multifamily. I'm extremely excited to have Dave Wolcott here today. We've been known each other for a few years here, and I'm excited. He's got a lot, just a lot of knowledge, a lot of awesome background, and so I'm really excited about this. And Dave, if you want to introduce yourself, and we'll take it from there.
Yeah, you bet, Dustin. Really grateful to be here to connect with you and your audience. And I guess just a little bit about my origin story. Probably like a lot of the listeners out there, I was raised in a middle class family in Connecticut. And I was just told that the recipe for success was go to school, get good grades, you're going to get a job, and life would work out, right? So I
Yep.
kind of followed down that path, and then in college had the opportunity to do the ROTC program and serve my country in the Marine Corps. So as soon as I got out of college, was able to really travel the world and really learn some things that they don't teach anywhere else in the world, such as leadership, teamwork, and integrity.
Hmm.
Shortly after I transitioned from the Marines, I got into the corporate world and I just quickly lost that sense of purpose, that sense of mission that was so, driving me in the Marines. And at the same time, Dustin, we were trying to raise a family. My wife and I, we actually had an 18-month-old toddler that was kind of, ruling the roost. And then on October 24th, 2000, we literally had triplets and quadrupled the size of our family like
Wow.
overnight, right?
That's great.
So, here I was in my 20s trying to build out my career and, trying to provide for, financial prosperity. And, the biggest thing that was going through my head, Dustin, I mean, I was literally sitting there. Just imagine holding three babies in your arms at one time and a little toddler saying like,
Yeah.
hey, I need your attention also. So the paternal instinct in me just really took over. And the first thing I did was I went to see my financial planner, because
Mm.
I'm like, how am I going to provide for financial security for my family? And, he just kept telling me the same thing that I kept hearing over and over, right? Which was max out your 401k. They
Yep.
have these things called 529 plans that you can invest in for your kids. And it was just right then that I knew, I wasn't going to build wealth as a retail investor in the stock market. So I started investing in all types of different assets, you name it. And this is back in 2000, right? So I got into
Oh, wow.
single family, I got into retail, I got into raw land, I invested in oil, gas, and really discovered the private world and how that worked. And I was really on this mission to, figure out how do the top 1% really build their wealth, right? So fast forward 20 years, I built a tech consulting company and actually exited that. But I was investing all the way as an active investor, as an LP investor. And my book, The Holistic Wealth Strategy and Pantheon Investments, is really, basically a foundation and a framework to help other people figure out, how can I get out of this rat race? As soon as possible, stop trading my time for money. And,
Yep.
what we've all read Rich Dad, Poor Dad, what is actually the playbook, right? What are the chess moves I need to make now to, grow my wealth, right? Like the top 1% and also not lose my wealth, right? I want to think kind of holistically around that.
Yep. Yep. Awesome. Yeah, appreciate that intro. Yeah, awesome background. So, okay, I know we could probably talk here for hours and all that. I know what we initially got introduced, kind of through multifamily and all that, but I know you do, you touched on some of the items that you kind of go deep into. I know infinite banking is one of those. Could you kind of tell me where that came from, how that kind of developed, and what that looks like today for your firm?
Yeah, so absolutely. So that's really kind of phase three. So we have like five distinct phases in the
Mm.
holistic wealth strategy, right? And in phase three, right? It's all about actually creating a dream team around your wealth and also creating infrastructure around our wealth, right? We kind of think about mostly, we're kind of programmed to just chase higher yield and what's this investment, what's that.
Hmm.
But by leveraging an infinite banking strategy, you can actually take over that banking control. So you have the control inside to be able to manage your cash flow better. And it's truly a multiplier. And this is why I see it time and time again inside of family offices with ultra high net worth individuals, is because you can simply, all this is, there's a lot of confusion in the marketplace, but essentially it's just a cash value whole life insurance policy that's properly structured, where you can grow your cash value in a tax deferred way, or really tax free if you do it properly.
Yep.
So you've got compounding tax free. You have asset protection because it's inside of a life insurance vehicle. Obviously, you have the death benefit to it. You can
Hmm.
pass it on to your heirs, right, and avoid taxes and probate. So it's part of an
Yep.
estate planning strategy. And then, best of all, we have this ability to actually borrow against the policy to go invest in real estate or another asset. So now you create an arbitrage, and you're actually using the same dollar twice to then go invest in other assets. And what this does is it just creates a great amount of velocity, for your overall portfolio. So infinite banking, I think, is a huge piece of the
Hmm.
infrastructure component of your wealth. The other big one would be creating a proactive tax strategy, right? That's really key to that. And then
Right.
also estate planning and asset protection are also key, right? We not only want to grow our wealth, but we want to preserve our wealth as well. And so
Yep.
we kind of combine all of this inside a virtual family office to help investors really, complete that picture.
Yeah, I like that a lot because I've didn't start in 2000 like you did, but started probably I started kind of down the just I similar to you, kind of got out of college and kind of quickly became I don't want to say disillusioned, but I was like, this is not the path for me, and so I started looking outside of that, and obviously real estate was one of those paths. But I, from what I've seen just over the years, a lot of people, and not saying it's necessarily right or wrong or whatever, but they'll focus on one slice of what you're talking about as opposed to kind of that whole, like you said, holistic approach. So I like that quite a bit. Um, is I guess, and what were the first two you mentioned?
Yeah, so really the holistic wealth strategy really all starts with a vision statement. If you
Okay.
don't have a target, you're going to miss every time, right?
Yep.
So it's so important for you to sit down with your spouse, your family, and really have a crystal clear picture of what your vision looks like. That we all do that as entrepreneurs in our businesses. We create a vision and mission statement, but people often don't have that, for their families and where they're going. So it's really critical to understand what that is, because then you can reverse engineer and start build the blueprint so that you're living that amazing life. And it's different for you, it's different for me, it's different for everyone. But really starting with that vision statement is key. And then phase one is really all about your mindset, right? And
Mhm.
knowing that you are actually your greatest investment ever,
Yep.
bar none.
Yep.
Like I've always gotten 10x, 100x for everything that I invest in myself, whether I'm investing in my health, whether I'm investing in my relationships, right? Or joining masterminds, right? To increase my intellectual capital, right? And it's kind of knowing that there's really, six forms of capital that really creates true wealth, right? It's not just financial capital. It's
Mm.
actually spiritual capital, intellectual capital, emotional capital, human capital, right? All of these different forms of wealth actually create this holistic picture that can really move us ahead. But if you don't have the right mindset, if you're not in a growth mindset
Mm.
perspective, you're really not going to move forward. And I know you
Right.
probably have, a ton of stories, as do others. The first time even you were talking about a multifamily deal or your first real estate deal, and you're sitting down at a Thanksgiving dinner table and you've got family you've known forever or friends, and what
Hmm.
do they say? My financial planner says that's really risky,
Yeah.
right?
Yeah.
Or,
Yep.
why would you do something like that? You've got 99 people that are going to say that's a bad idea. Well, it's all about mindset, right? Are you
Yep.
open-minded, right, to taking on these other things? Or let's take something like taxes, for instance. The entire 99% of Wall Street in financial planning is advising you to defer your taxes. So just stop and think about that for a second. You know, do you think taxes are going to go up in the future or not, right?
Yeah.
I would probably say, I don't have my crystal ball, but that's probably the one thing I can guarantee. So
Yep.
wouldn't it be better to pay the taxes on the seed and not the harvest?
Right.
Right? But it
Right.
takes different level of thinking versus following the masses and just saying, "Oh, I'm going to put it all in my 401k." But guess what's going to happen? At the end of that cycle, when you go to take that out, you're going to be getting taxed at the highest tax bracket possible.
Yep. Yep. Absolutely. I guess there's, like I mentioned, there's a lot of different things. Is there, uh, I guess just kind of turn it over to you, because I know there's a lot of things we could talk about. If there's one particular topic you want to kind of touch on, and then I'll probably ask questions from there.
Yeah, sure. I mean, I could just give a little bit more of an overview, right? So we talked about creating the vision statement. We talked
Yep.
about phase one, which is mindset. Phase two is really about increasing, all those forms of capital that we were talking about, right? Many people, like just as an example, right? We all love real estate, but did you know if you invest into oil and gas, that 100% up to 100% of your investment can actually be tax deductible against your active income.
Yep.
So a lot of people don't realize that, but that comes with increasing your financial IQ so you understand what type of opportunities are available for you, how you utilize those in your own wealth strategy. Right. Those are really important things. We're increasing that financial IQ, becoming a better investor. Mindset is important as well. And then we move into phase three, which we kind of talked about creating that infrastructure and dream team. And, this is something the audience, if you guys are listening right now, right, in your car or whatever, just do a quick inventory and say, like, do I have someone that's going to take my health 10x right now? Right?
Mm.
Is my health and medical team, on my dream team that's going to take me there? Do I have someone on the asset protection side? Right, that's going to fulfill that. Do I have a set of, great sponsors or operators to bring me, exclusive vetted deal flow? Right, that I can just count on, right, in terms of building my portfolio, right? Is the risk management side, right, in terms of asset protection and estate planning, do I have someone there? Right? Because
Mm.
if you have any holes in your dream team, those are basically blind spots that could really, take your wealth off track, big time. And just think about wealth or health again for a moment, right? I mean, look at Steve Jobs. He had all the
Mhm.
wealth in the world, but he
Yep.
couldn't buy himself another day,
Yep.
right? So you've
Yep.
got to be investing in your health and investing in yourself, every day.
Yeah.
After that, Dustin, we move into phase four. And
Mm.
this is where it really starts to get fun, right? People say, okay, I'm with you, Dave. Like I'm tracking, I'm investing in myself, I'm starting to build this team and everything. But you don't have that first 50,000, 100,000 to invest in that next deal. Well, we call this phase asset repositioning.
Mm.
So for instance, most people are completely over concentrated in the stock market in government sponsored qualified plans like
Yep.
IRAs and 401ks. Well, you could do something like use a self-directed IRA, for instance, to diversify that into an asset class that's non-correlated to the stock market. And oh, by the way, like as an example, we have a private credit fund that's
Mm.
doing merchant cash advances. So essentially, we're doing
Oh,
lending,
cool.
to small businesses. And you can see we've been averaging over 20% return in that, right?
Wow.
So if you're sitting in a 401k, you're making maybe 7, 8% over the long haul in that. So if I can take that capital and then increase the yield by, 2, 3 times that, right? That's going to significantly boost my wealth, right? Once I start
Yeah.
compounding that for the next 10, 20 years. Another big opportunity area for people, even in today's interest rate environment, if you can take out a home equity line of credit, even at 8, 9%, whatever you can get, people are under this Dave Ramsey impression, right? That, hey, I need to pay off all the debt. But if the government's giving you debt on 7%, you get to actually increase your deductible amount in terms of, mortgage interest, right? So you
Yep.
can become more tax efficient by borrowing against that. And now let's put that into a nice cash flowing asset, right? That's low risk. You can service the debt and then basically increase your capital, right? Based out of like doing nothing, right?
Yep. Yep.
Making a three-dimensional chess play. So that's a big opportunity, is to look at rebalancing your portfolio, start to get into alternatives and real estate in these other asset classes that can provide you what I like to call really a trifecta, which is driving passive income, having tax efficiency, and then also forced appreciation inside of the asset, right? This will beat equities hands down, right?
Yep.
Because you have a three-dimensional play there. And then
Mm.
the last one, Dustin, would be phase five, which is the fun one. This is all about building massive passive income. So,
Mm.
how can we allocate capital, if we do have capital coming in every year, into one of your multifamily properties, right? Into other, multifamily self-storage. We just did a dental or basically medical office
Oh, okay.
buildings,
Yeah.
which were, again, great way to diversify, provide
Hmm.
cash flow, provide tax efficiency, and you just keep building this out. And I'd probably be remiss. I mean, why don't we just give the audience, right, a great example here? I think this is a really good simplistic example. So let's just take the conventional financial planning model, which says you build up an accumulation theory, and let's
Yep.
say you build up over your lifetime $4 million. Okay. And so if at 65, you have $4 million, and then they tell you you're going to withdraw 4% of that,
Yep.
right? So 4% of that, 160 grand that you're living on, but they really don't talk to you too much about taxes, fees, and inflation. So you
Mm.
probably like more like 110K maybe
Right.
that you're living on after
Right.
saving up, that whole thing. And you tell me, Dustin, if any of my assumptions are incorrect here, but let's take
Okay.
that same 4 million, and we have the same 4 million, and that is allocated into, let's say, all of your multifamily buildings.
Okay.
Okay. And you have some other diversification in there, right?
Yep.
With some other assets as well. But,
Yep.
we have a good majority of things in there because you're a great operator, right? You have been, a great track record and things like that. So we can average, let's say, 8% cash flow. Okay, so that 8% cash flow is now double the 160. So now
Yep.
you actually have 320K and cash flow coming in. By the way, that's tax efficient because you're using bonus depreciation or some other forms of depreciation.
Yep.
So now you're netting 320K. And then, oh, by the way, your asset value of 4 million is still growing by like 10% a year. So rather than killing your golden goose by 4% a year, you actually keep feeding it and you're growing more than 10% a year. So you actually increase your income in your later years and actually create legacy wealth.
Yep. Yep. Awesome. Yeah, it's yeah, I get yeah, it's interesting. I was, like we kind of touched on, I was in a W-2 job and all that and actually I thought it was a good job and all that. It just, wasn't necessarily the path for me, but I know that I do really well when I have kind of that carrot out there. And it was and I don't mind working hard and all that, but for me what was challenging was just whether I worked, my butt off or was lazy. That's just not who I am. But my it was a 3% raise.
Yeah.
And so that for me, that was, not having, not that I have to control everything, but not having, I if I push hard, I would like to see, that amplified some. And so that was challenging. And then to your point about your kids and all that, that's rings. I have a son. He's 13 now. And I don't know if you've seen it or heard it, or I remember seeing this on LinkedIn a number of years ago. But they're like, you basically have 18 years, or 18 summers with your kids before they're, and you spend 80% of your time with your kids in their first, while they're at home, their first 18 years. And so um, for me, money aside and all that, because I don't know, I live, fairly, frugal or whatever, but for me, the biggest thing is time. And I can never, his recital or, he was at a golf thing this morning, and I was the only one that, had the availability to go pick him and his friends up because it's raining outside. So golf was canceled. So just that time, and and when he has school events and all that, I'm usually helping out, cart some of the other kids around as well. And I'm can't, doesn't matter if I'm making a lot of money or whatever. It's the time for me is the biggest thing, and that passive income is what helps provide that time flexibility.
Yeah, 100%. And it's really, I think what we're doing here is we're flipping the model, this traditional
Hmm.
model on its head, right? And more people are awakening to the fact that, real estate and alternatives really should be part of the portfolio. I mean, I've interviewed Michael Sonnenfeld, who runs Tiger 21, right? And
Oh,
you can
cool.
see
Yeah.
that, they're, generally speaking, they update it every quarter, but the members have only exposure of about, 20, 22% in public equities, right? So
Hmm.
what does that tell you, right?
Right.
In terms of some of the best investors out there, north of, nine figures in net worth, are not putting all their eggs in one basket, right? And I'll
Yep.
also, put a disclaimer out there that this is not for everyone, right? This
Hmm.
plan is not for everyone. Certain people
Sure.
want to, they have a great W-2 job, they just want things kind of stable. But if you're
Hmm.
looking to outperform the market, if you're looking to 10x your life in different ways, right?
Hmm.
Increasing your time as well. This is a phenomenal way to do it, right? By getting into real estate alternatives and really overall this whole alternative strategy with which to build your wealth.
Right. Right. Awesome. And you have a mastermind as well, and then you have a virtual family office if you're able to touch on each of those.
Yeah, for sure, Dustin. So, I mean, the way I see it is, look, I'm an LP too. I'm investing in all these deals, right, that we're
Yep.
doing. And there's different challenges you run into. There's like complexities with growing your wealth and everything. So all of these were
Hmm.
solutions. Infinite banking was a solution because like I ran out of capital investing in real estate 15 years ago, and I wanted more control over my capital. So I believe in that so much that I got licensed, and then we kind of help our clients with that.
Yeah.
The virtual family office is this done for you model. So,
Okay.
people that are really scaling their wealth really frankly only have so much time. I mean, if
Right.
if you're an entrepreneur, a high income individual, you only have so much time to get on the
Mhm.
phone with attorneys, CPAs, and do all this. Well, we're that other person in your dream team to act as your really fractional chief investment officer, to help you allocate capital, to avoid risks, and really take time off of your hands. So that's, a big thing there. And then I think the mastermind is more set up for people that are really kind of the DIY and learning themselves and
Mm.
love all these alternative, things. We kind of geek out a bit on these
Yeah.
alternative strategies, right? How can we make these chess moves, right, out of nothing, right? And let me give you
Mhm.
an example, right? We had a member who came to us. He had all of his assets in traditional 401ks, IRAs, paying off
Mm.
his house, things like that.
Yeah.
After spending some time in there, changing the way he thought about everything, he actually purchased like a $1.2 million short-term rental, put down no money of his own. He
Wow.
got seller backed financing, so he was able to actually put no money down. He
Wow.
created a six-figure tax offset that year, and then create himself a passive income stream, all
Wow.
all with no money down, right?
Wow.
So that's the level of thinking that you can do, right? When you're surrounded by the like-minded people, you have accountability partners, right? And you've got proximity, right, to see different things. So we're able to do that. And then lastly, we're really excited. We're kind of launching our next revision of our software, which is Pantheon Wealth OS, to
Okay.
actually help people manage all of this, right? Because
Hmm.
how many spreadsheets can you have to track all these different, forms
Yeah.
of passive income that you have coming in? And oh, by the way, are you tracking your tax liability for that recapture event, right? When a
Mm.
property exits, in 5 years or in 8 years, how do you keep all these things together? And it's not just stocks, bonds, mutual funds, right? It's all different asset classes.
That's awesome. That's super cool. Yeah, yeah, really really like how you feels like you guys are kind of looking at it from all angles and not necessarily just, hey, that's the path we're going on. So really, yeah, I love that. Yeah, for me, I mean, I know we hadn't talked about this, but I've had, I guess, just kind of being in the real estate space, I've seen infinite banking for quite a while, probably, I don't know, at least 10 years, if not 15. But yeah, I'd, read a few of the books and all that and been to a few events and all that. But yeah, I have a few policies that I've had for I don't know, I think 6 or 7 years or something like that. It's
Awesome.
been a good just vehicle for you always, especially if you're in multifamily, you always need capital for earnest money or whatever. So it's been a really good tool for me and my family. So
Awesome.
yeah, yeah. Um, and I guess as far as the virtual family office, is there kind of a threshold for where it makes sense to really look at that in terms of net worth? Is there, do you need
Yeah,
to
good
be
good question. I mean, we have clients from 2 million up to 100 million in net
Oh, okay.
worth. But the
Okay.
way I like to think about it is it's more around the trajectory that people are on, right?
Okay.
So someone could have a lower net worth, but they're waiting for an exit, right, for their
Right.
company. Or they're very high income individual, like a doctor, right, that is really scaling their wealth, quite a bit. And it's more like, where are you going to be in the next 5 to 10 years, and how can you, not only, capitalize on expanding that, but also being very cautious and, protecting that wealth, as you go.
Awesome. That's great. Yeah, I trying to, yeah, I think that's, yeah, I really appreciate your time today. Is there, what's the best way to kind of reach out and learn more about you, get in touch with you? Yeah, I've really enjoyed this today.
Sure, Dustin. What I wanted to do to set up for your listeners is, if folks enjoyed kind of the thinking here with the holistic wealth strategy, give them a free copy of the book. If you go to holisticwealthstrategy.com, and you can download a free copy of the book and, connect with us from there.
Awesome. That's cool. Thank you very much. And yeah, appreciate your time and great to catch up as always. And yeah, if I'm in Florida soon, I'll let you know. Would love to grab lunch. So,
Sounds great, Dustin. Appreciate you.
all right. Thanks, Dave. Have a
All
great
right.
day.
Thanks.